on a fire lake. Said guard your ground, that's your golden gate. Now we write new chapters with the same red clay. Tech in the pocket, but we still pray. Farmers in the fields doing handshake deals. Now we sign on screens, same love, new feel. Celebrate the harvest when the numbers shine.
Welcome, everybody. Thank you for joining. Thank you, everybody. Let's go. Thank you, everybody. Thank you for joining. Thank you all. Welcome, everybody. Let's go. All right. Welcome, everybody. Thank you for hanging out with us and taking the time to join the call today. So today we have the honor and privilege of having one of the biggest, largest body in the US that helps with legacy nutrient deduction program. And we get to know a little bit about them, understand what exactly it's all about today, and we can ask all our questions. For those of us that are investors already, thank you. Thank you for being part of our community investing already. And today you would get to know a little bit more about investment around land and how we can take advantage of all the tax benefits around it so much. So without wasting much time, I have the privilege. And before we do that, actually, let's see what part of the world you're logging in from. We always do that all the time. Feel free to type where you're logging in from so we can just acknowledge you and say thank you for joining real quick. Let's go. Dallas in the house. Let's go. Dallas, Texas in the house. Let's see. What part of the world are we logging in from? Let's go. What part of the world are you logging in from? All right. We see Dallas in the house. Let's see. Where else are we logging in from? Let's go, folks. Thank you all for joining again. We'll make it as quick and brief as possible so we have enough time for questions and answers. So, Selina in the house. Thank you, Martha. Selina, when you go in the house, let's go. Awesome, sis. Awesome. All right. That is awesome. All right, let's do a countdown and we just get started immediately and bring James on board. Let's quickly do a countdown. I will do that in a second. Let's go. All right, welcome back, everybody. So without wasting much time, let's jump into it. We have the pleasure of bringing in James on board. James is the regional manager of Safra. And for some of you, you might have heard me talk about this a lot. In our community, one of the things is that we're always looking at opportunities to bring the best mind out there to let us have the best experience in land ownership and building wealth through land ownership. And we have 3 layers within our community. Number one, we make sure you have ag exemption, whereby you pay minimal to no taxes at all. The second thing is that we lease your land to ranchers and farmers, and they pay you every year. The third one is the third pillar, which is very important for us, the legacy nutrient deduction program. And Safra has been an amazing partner. And without wasting much time, with me today is James in the house. Hey, what's up, James?
What's up, guys? How are you? Thanks for having me. Excited to be here. I got to say, that's the best intro I've had. I feel like about to go worldwide here.
Hey, you all are worldwide already, James. And and James, a lot of our community, they are all excited about this meeting, and because a lot of people own land. And the question is always, okay, is this a scam, really? Because now you're telling me that, okay, we're going to own, get all this tax benefit. It's also part of IRS tax code. It's just creepy on the surface without getting into the details. So I hope today you can make all our team just say, okay, you know what, this is legal, this is right, this is what we've done, and we can make it as interesting as possible. So, your show, James, introduce yourself and we'll get into the details.
Yeah, thanks so much. Hey, everybody. My name's James. Last name's St. Peter. I didn't put it on there. And I'm with Safra. I'm a regional manager. I cover Texas, Oklahoma, and New Mexico for the company. And believe it or not, we could be a regional manager just for Texas because it's big enough with enough land out there to be a region by itself. So, yeah, I've been with the company for a while now. I've been following the company actually for a couple years. And I just really... the one thing that helped me to really want to join the company is because it provides so much benefit to landowners, which are kind of the backbone of America. So that's why I jumped in on this, and I love it. I love helping people, and that's what this does. So what we're going to do today is we're going to walk through some slides. Slides can be monotonous. They can be interesting, but it's going to give us a good general overview. I'm trying to make this relatively simple because as landowners, we want to understand how it works, but we also, in a lot of cases, have CPAs that understand the tax filings and things like that. So I don't want to get too much in the weeds on that, but if you do have specific questions regarding that kind of stuff, I'm happy to answer it as well. So I'm just going to go through some slides here. There's not too many of them. So let's just kind of walk through these. Just kind of pay attention to what I'm saying here. And if it makes sense, great. If it doesn't, just kind of hold on to what doesn't make sense and feel free to ask away once we get through this. Some of the slides as we progress might answer the question that you have on your mind. So let's just kind of walk through it if that sounds okay for everybody else. Sounds good?
Yes, sir.
Okay, great. So what legacy nutrient deductions are, and they're deductions for excess nutrients in soil. And what BOA SAFRA does is we've taken one tax code out of thousands of tax codes, and we've come in and we've streamlined the process for one tax code. So we come in, we collect all the data, the analytics, and then we prepare an IRS ready report that you can then give over to your CPA so he can go ahead and file that for the IRS. We go in, we sample the soil. We go from a land perspective, we go 6 inches deep to get those nutrients. We go in there, we get the report. It gives us the analysis of what was done. And when we get all those nutrients put together, we put it in a table format so you can see what nutrients were excess, what the value was of those nutrients, and then it gives us a final acreage, average deduction per acreage. And then with that, like I mentioned, we'll get you a report, and that's our CPA tax preparer ready. And then we also have CPAs that work with us. So if your CPA did have some questions or wasn't real comfortable with it, they can also work with our CPAs to get a better comfort level. Okay, I'm gonna go to the next again. So this just kind of goes over the numbers of our company, BOA SAFRA. We operate in all 50 states. And if you kind of going from top to bottom and back around, we average $1,700 deduction per acre. So it's a very significant amount. And we've done over 4,500 reports. We've had about 5 or 6 audits in the time we've been doing this out of the 4,500 reports. So one thing it shows right there is there's not a lot of audits done because the numbers are very good. But a lot of times the audits will come about not just because of us, just because it's an audit in general. And then those audits in general, when they did look at our report, we've had 100% success rate on it. So we've been very good at what we do. Some things that to look at as a landowner, just to make sure you do qualify, because our whole point here is to benefit the landowners, benefit you guys. And so if it's something that's not going to benefit you, then we want to obviously steer you away from it. No reason to work with us. I don't think many of this is going to apply here, but I just want to touch on it. Anything that was purchased before 2000, we can still do it, but usually the price of the land at that time and the price of the fertilizer makes it where it's really not cost effective. So we try to steer from 2000 and up. Your land does have to be crop, livestock, or timber production. We're even starting to steer away a little bit from timber. I don't think that's going to apply here. But another way to look at it is any land you buy, just make sure it's not hobby land, meaning put a couple horses on it. You ride your horses a couple times during the week. It needs to be an ag, crop, livestock producing land that's generating income off that. And then minimum investment is usually about $500 per acre. Anything below $500 an acre, if you acquire it at that lower than that cost, usually the tax benefit's not there. So, and then we offer our price, and you just work with us and pay our price directly at $40 an acre. And so just like anything else, your $40 an acre, that is an expense. So that's a taxable event as well. And so we get the question a lot, what are legacy nutrient deductions, right? You want me to do this, but what are they actually? And as you can see on the slide right here, these are just deductions available to landowners, like we discussed, agricultural landowners. And they're based on the value of the agriculture necessary nutrients in the soil when the land is purchased or inherited. So when you're buying this land, it's already got fertilizer and basically fertilizers put into that land to get it to a nutritional value. So when you're paying for that land, you're actually buying the land, but you're not really, when you make that purchase price, you're not subtracting out those ingredients and the fertilizers that are in that land. So you're buying a asset, which we can go ahead to the next page, Ken. And so what it's doing is it's actually removing those nutrients, and we're taking those nutrients out because you're paying for them. And so you're going to be able to recover that, because those are what we call wasting assets, which are like, another way to look at it is if you bought a barn with hay in it, that hay is going to be used. So it's called what we call a wasting asset, which means it's a deductible event. And so that's why it's out there. And also they're out there because they want good stewardship. The better we can make that land, and if you put fertilizers and stuff in that land, you're having a better land, a better crop, etc. And the government is going to reward you with that for putting those nutrients into the land. And so just, it goes back into what I was saying right there. The tax code lets you recover the value of the pre-existing reserves you purchased. So, and the question we get a lot is this new? Because it is new to the market, I will say that, but the tax code's actually been out there since 1960. Okay, we can go next. So what land can qualify? And this is what we kind of discussed on the previous slide. It's anything that's annual row crop, pasture, grazing, any kind of farmland, grassland, where you're putting nutrients into that soil to use it for making money off that land. Okay, next. So this gives us the state of Texas. We work in all 50 states, as I mentioned. It sounds like everyone on this call was in the state of Texas, and I think that's the case. If you're not, we can always talk after this on other states, but also sounds like we're probably falling in a lot of, maybe if you look on District 6, District 7, right in that area, maybe District 5, I'm not sure. But you can see $1,600 to $1,800 on average. So this is, again, on average. What we're seeing is a deduction. Some are going to fall a little higher, some are going to fall a little lower. It's really hard to say. That's why we have to go out and do that soil sample. But this gives you a good idea. I mean, if we look at the lowest across the state, we're at about, looks like $1,400, all the way up to about close to a little above $2,000. Okay, next, please. Okay, so what are the benefits for you guys? Well, it's pretty simple. The main thing is we can protect our income, right? So any income we're bringing in, we can use this as a deduction against that income. Also reduce the cost of real estate. So in the future, if we decide we want to purchase some more land, we can go in there knowing we're going to reduce the basis of what we're going to pay for that land. So once we purchase that land, we can apply this like we're probably doing in a lot of these situations here, and that overall cost of that land is going to decrease. And then it's also planning for the future. So if you want to buy this land, and a lot of people buy land to pass it on down to future generations, and if you do decide to pass it on to future generations, you can just use what's called a step-up basis. With that step-up basis, once that land's inherited and taken over, then they can reapply this nutrient deduction for the new landowner as well, for the inherited landowner. So anytime the land changes hands and it goes to a new owner, this can be used in what we call a refresh and can be reapplied. So we're using this a lot now we're seeing it, now that it's become a lot more familiar with the market and common in the market. A lot of people are now legacy passing on their land to, the next generation. And so they are taking advantage of this so that next generation, once they get that step up basis, can apply this towards that. Okay, next please. Okay.
This is the best tax shelter in Texas, and it's not made of paper. When you hold up to 11 acres in Roxton, you ain't just buying an asset, you're buying a fortress. At this size, you lock in the Texas Agric exemption. While the median home price in Fannin County jumped 16% last year, your holding costs stay low, while the industrial boom in Sherman does the heavy lifting for your value. This is the hole in the donut. It's the last undervalued entry point before the regional identity shifts completely.